Welcome, everybody. Boroughs and Burbs, Season 4, Episode 134. We're talking affordable housing, workforce housing, and I've got special guests on today. Peter Neill from GSP REI. Say hello, Peter.
Hello, hello. Thanks for having me. Great to be here.
And where are you? Where are you from now?
I am calling in from the suburbs of Philadelphia.
Awesome. And I've got James Nelson of Avison Young. Say hello, James.
Hi, everyone. Thank you so much for having me. Very excited to have this conversation. Love the title of the show and reporting in from the studio here at 535th Avenue,
Awesome.
Midtown Manhattan.
Awesome. And I want to say hello to my co-host, co-pilot, Roberto. Where are you, Roberto?
I'm on the Upper West Side of Manhattan. I'm very excited about this. I kind of want to understand, why is this important? Literally, why is this important? Why do we even need to talk about this? But I know that I'm going to learn. So this is really good for me.
Everybody is buzzing about affordable housing. So it's been a long time in coming, this show. First, I want to thank our sponsors. We've got Grace Farms. There's a shot of the famous river building on 80 acres in New Canaan, Connecticut. They just did a summit on sustainable development. Pretty soon, they're going to be celebrating Earth Day. And I want you to go up there, enjoy the campus, and then I want you to buy their tea and coffee and support their mission. And you see there, Earth Day 2024, they're doing planet versus plastics. Buy one, get one on select black teas this week. And with that, let's get right into the show. If you type in the word affordable housing into Google, affordable housing charts, you see that everybody is talking about affordable housing and nobody seems to agree on the definition. So I asked two experts, and here's GSP REI. What do they do? They are real estate investment managers, and they know something about affordable housing. So we've asked co-founder Peter Neill to talk to us today. And our second guest, as I said before, James Nelson. He's the principal and head of tri-state investment sales for Avison Young. And when I looked up their portfolio, I saw that it was highly concentrated in New York City with a couple other investments such as out in Huntington, Long Island. So we get a little bit of the perspective of investors and experts. I'm going to hit stop share. And with that, let's begin. James Nelson, what is affordable housing and why does it matter?
Wow. Well, it's fundamental, right, for us all to have housing and a place to live. And it's been, I don't know if you all planned it this way, but the timing of this show is unbelievable because here in New York, because it has been all the talk right now. Up in Albany, there was a whole slew of new legislation that's being passed as we speak right now to really with the hopes of creating new housing, but also preserving some of the existing housing. And I'm sure we can get to that. But to answer your question about what is affordable housing, why is it important? And I think to kind of, first of all, state that there's all different levels of affordability. And sometimes we talk about affordable with a capital A. You hear it, capital A affordable and little a affordable. And so are we talking about housing that's subsidized, which would be the kind of the capital A affordable, and all that housing that is supported by subsidies at the city, state, federal levels. And then we talk about housing on the whole. And when we talk about workforce housing, and just overall affordability levels, and how do we, I think everybody can agree on the need for more affordable housing across the board, all spectrums, right? So when we start to get really technical, we can talk about the different levels of affordability. So in New York, what that means is what percentage of the annual median income. So a lot of the discussions that were going on with Albany and creating new tax abatements for new development are talking about, okay, what level of AMI, right? And how are we going to create different bands of that affordability? But I'd make the case that, look, we need more housing of all affordability levels, right? And so in New York City, just with the population growth we've had, if if you listen to the city, if you listen to the real estate board, we have a need for between 500,000 to 530,000 new housing units to kind of keep up with that demand by 2030. And last year, okay, where there wasn't any subsidies available, there was only permits for 10,000 new units. So you all do the math. If we're only producing 10,000 housing units per year here in New York, and we need to get to 500,000, it's going to take us a really long way. So, we're cautiously optimistic that some of the things that were decided on, and we're still waiting for the details from Albany, are going to help create that. So really looking forward to getting into this conversation and figuring out how we can create more affordable housing for all.
James, why do we need 530,000 units? People coming in, old housing stock being no longer, usable?
Yeah, it's a combination of things. First of all, I think it's a fallacy. You hear, especially after COVID, there was kind of this, I guess you hear people talking about people leaving New York en masse, going down to the South. And I'm not saying that there weren't, people who moved to Florida, but the reality is if you just look at the population count, it's growing here. And without getting too technical about New York rent regulation housing, there's roughly about 3 million housing units here in the city, okay? And about a third of them are rent regulated, okay? And with some of the changes that took place in 2019, where those units, those rents were kind of frozen in time, if you're one of the lucky recipients who has one of those units, right, which are not means tested, okay? So maybe you inherited that Central Park apartment from your grandmother who was lucky enough to get one of those rent control apartments, right? You're probably not leaving that unit, right? So if you have 1 million of those units set aside where people are holding on to them, right? And then you have new people coming to the city, if we're not creating new housing stock, right, just to keep up population, we're not going to be able to provide. So there is a huge housing shortage right now that certainly needs to be addressed.
I've heard 3 different ways to address affordable housing so far in the conversation. One is subsidies to get them built. I've heard the second one is subsidies that we give people to rent units. So we either give it to the renter, we either give it to the developer, the subsidy, or the third way you just mentioned was regulations, where we write a new law and we either freeze the rents or we write a law, a zoning law. So there's a third way through regulation. Which is the method that you're seeing most common or most commonly talked about this election year as a strategy for getting it done?
So in 2019, the Housing Stabilization Tenant Protection Act basically took the approach to freeze the regulated units. Okay, so the way regulated housing worked in New York was once a tenant vacated, it used to be before 2019 that you could go in and do work and you could raise the legal registered rent to a point where it was now fair market. Okay, so the fear from a lot of the elected officials is we're losing this rent regulated housing stock because a tenant vacates, it's getting renovated, and then it's fair market and it's no longer affordable. So the approach after 2019 was just to freeze these units in time where you can't raise the rent, okay? And I was going to add to your 3 ways, which was a good summary, that there's a fourth where I'm really, a big proponent of. I think the issue is we need more, right? The issue is we do not have enough housing. If we just snapped our fingers today and all of a sudden we have 500,000 new housing units, right? What do you think is going to happen to the rents, right? And we know because we already saw this happen in 2020. After COVID, where suddenly people left the city and half the units, maybe not half, but 10-20% of people leave the city, they go find a place to live, with family or where else they might have gone to. We saw rents immediately drop, right? Because we're talking about supply and demand. So I think what's so important right now is that we need to figure out how to create new housing. And it really does have to be a public-private partnership, because the reason why developers are not building new rental housing right now, especially affordable, right, is land is going to cost whatever the market's going to bear, right? But if I'm now taking that risk where I'm borrowing money where rates are, very high today, right? Not just for buying an apartment or a house, but also to borrow for a construction project, right? And I'm going to build this new building, and then 25 to 30% of my revenue goes to pay for real estate taxes, right? You start doing the math on that, and if you have to pay full taxes day one, numbers just don't work. In some areas, if you gave me the land for free, the numbers don't work, right? So that's why there's been so much talk. You all probably hear about 421A, if you've heard about that in New York. And that was a program that worked, right? It got tens of thousands of units built, right, on the tax roll. And then you start getting that tax abatement and your taxes phase in over 35 years, right? So now, and that program expired in 21. And what happens after the program expires? Land sales drop 75%, right? And so rental development, affordable development on hold, right? So now, finally, we've seen them, Albany reintroduce, New York State introduce what's now going to be called 485X, which is going to be a replacement for that program. But now we have to see, okay, well, where are the levels of affordability, right? Because I'm still going to have to pay what I'm going to have to pay for land. I'm running the numbers. It's more expensive to build today, interest rate costs. And now if I have to provide a certain amount of affordable housing in the development, I have to see if the numbers actually work to go do this. So that's going to be the big question that we're gonna find out very shortly.
Can you describe the basic differences between the 421A and the 485X?
So the levels of affordability in this new program are going to be much greater. And one of the biggest criticisms that 421A received was, yes, and there was different options, right? There was option A, B, C, D, but the developers all gravitated towards option C, okay? Option C, what was that? Yes, 30% of the units were affordable, but those were at 130% of AMI, of the annual median income, okay? So what that means is that's not, deeply affordable units, right? Those are, you could call kind of middle income, that would be like a $2,800 a month, one bedroom, right? Better than what probably you'd try to find in the city right now, but not deeply affordable. So the criticism was, you're not really creating deeply affordable units if everyone's going for this option C. We need to, cancel this out. What we really need is that 80% of AMI, that 60%. And that's what the new 45X is going to do, is it's going to require greater levels of affordability.
Peter, you are an investor. He's just talked to us about a very bleak landscape. Why does it make sense to be a real estate investor in the affordable housing space?
Sure. Well, as I'm sitting here listening to James, I'm thinking there's a lot of the reason we do what we do with single family affordable housing and utilizing Section 8 vouchers instead of HAP contracts and things like that, where the subsidy for us is tied to the tenant and not tied to the building. And then, our focus on redevelopment and not developing new units, that kind of thing is, so a lot of the things he's saying, I completely 100% agree with. And it's one of the reasons we do what we do and why our strategy is structured the way it is, because it gives us flexibility to kind of go back to the initial question of what is affordable housing. We look at it the same way that HUD looks at it. So the affordable housing is when a tenant is paying no more than 30% of their gross monthly income towards their rent. And that could be achieved through a subsidy, or it could be achieved naturally with no subsidy. So we kind of use the term affordable and workforce housing because most people, most investors look at affordable as there's a subsidy connected to it. Not always the case, but a lot of people tend to, when you say affordable housing, think subsidized housing. And then workforce housing, it's going to be oriented towards people who are working and that have, a job, and, you want the property to be located in a way that they can easily, get to where they're working, and, easy transportation and things like that. But typically workforce housing, the average investor doesn't think subsidy. They just think, kind of middle income and something that's affordable, something that's not, naturally affordable, and something that's not luxury.
Where's the opportunity? If I put $10 million or $100 million into your fund right now and said, go ahead, deploy it. I want to do good.
So instead of building it, it's buying it. So it's buying, dilapidated, blighted homes in areas that are trending positively. So we watch crime maps and things like that, and we tend to look for value generators, so hospitals and certain business districts, and just access to transportation. And in the markets that we invest in, primarily Baltimore and Philadelphia, a lot of you guys in New York have come down to Philadelphia over the last couple of years. It's made a little bit harder to find good deals. But Baltimore, the secret isn't quite out yet. It gets a lot of bad rep, and from a national perspective, but there's a ton of demand, not just for housing, but there's for rental housing, but also for resale. We see a pretty strong resale market, probably now more than there ever was in the Baltimore market. So it's buying delinquent, dilapidated, blighted type properties, and then redeveloping. This way we're utilizing investor capital for the acquisitions and the construction costs. We're not depending on state or government funding in any way that a normal, a multifamily type affordable housing developer would need, to go back to what James was saying, to make the project affordable, because their land cost is going to be as much as it is, and the building cost as much as it is, and maybe having to work with unions and
Are you
things like that in
competing
the
with
city.
Blackstone and the rest for all those?
No, we're competing with smaller nonprofits and mom and pop type investors, that are buying a few homes a year, redeveloping, and then either selling them or keeping them as a rental. There certainly is some institutions, or I would say nonprofits, that receive institutional money that are operating in the space. And there are a few institutional backed firms that have started to buy more workforce and affordable housing. So like not Invitation Homes or American Homes for Rent, or like some of those companies that invest primarily in the South, and, nicer, neighborhoods, with good school districts, and, all those kind of location type investments. But there's over the years, there has become more institutional type competition in the workforce and affordable housing space. But for the most part, we tend to compete more with, smaller, mom and pop type investors that go in and look for value adds, and, look to keep a small rental portfolio. But we tend to go, even them, they don't like those fully blighted properties where they have to go in and put $100,000 worth of work into a place. They look more for the value add type properties where it's kind of, they can go in, it's small renovation, lipsticks type stuff, and then lease it out. We do all of our construction in house, so our bread and butter is really those fully dilapidated properties that we could pick up south of 30,000, put 80 to 100,000 into them, and then resell them, or ideally keep them as a rental.
Is there an opportunity to, for example, you have a house that's dilapidated where the zoning will allow for a multi-family structure? Can you raise the building and create?
Yeah.
And do you do that?
We don't, that would involve a lot more, dealing with the city and with zoning and getting possibly zoning relief or permitting and things like that. You see that more in Philadelphia than you do in Baltimore. In Baltimore, there's, in both cities and in all pretty much major cities, there's going to be city provided affordable housing, and that tends to be multifamily. So there's a huge demand for single family homes. A lot of people that receive these subsidies, they have families, like a one bedroom or a studio in a multifamily apartment is not ideally, it's not their best situation. I mean? So we see the demand, and and we can, go in and renovate a property very quickly that's already single family and keeping it single family. Whereas we've certainly looked at opportunities to redevelop old commercial buildings, warehouses, even dilapidated retail or apartments and things like that. But it's just a little bit of a longer process compared to for us, where we could usually have a property cash flowing again in under 90 days. That it would be a little bit more red tape connected to that. But in Philadelphia, where it's harder to find deals, you do see investors where the zoning allows for you to build up and build out and all that kind of stuff. You see that it's much more common in that market.
So if from a standpoint, I was making an analogy to just buying something. Is your inventory, are the possibilities, the opportunities hard to find?
Not in Baltimore, no. You could drive around Baltimore. There's a lot of vacant homes, and there's a huge demand for them. It's amazing. I mean, how many vacant properties there are when you drive around, and there's a lot of construction going on too. So it's not like completely untapped, nobody knows about it or something like that. I mean, there's certainly people that are buying and developing in the city from a commercial standpoint and a residential standpoint. But in Philadelphia, it certainly is harder, and there certainly has been institutional backed investors that have come in and bought up a lot. And New York money coming down to Philadelphia, they saw the margins in Philly, and they were amazing compared to what you could do. And we, as Philadelphia, we're based in Philadelphia. That's where we grew up and all. We went to Baltimore and probably felt similar to how New York investors felt when they came to Philadelphia. I mean, it was just
so where does the Baltimore people go then?
Yeah, who knows? Why all over the place? I mean, Washington D.C. and they probably come to Philadelphia. It depends on what you have a stomach for, and what you want to do.
So what happens in New York City? What happens in Greenwich, Connecticut? What happens in New Canaan, where there are no blighted properties and there's not really a whole lot of opportunity? What is the lesson learned? I will say that California thinks that the answer is through zoning regulations and allowing affordable accessory dwelling units everywhere. And in so doing, they're saying we're going to spread the pain, we're going to spread the opportunity across every neighborhood. Everybody's going to be basically, what do they call it? Upzoned. So that's one way of adding affordability in an expensive neighborhood. Have we learned any other methods besides upzoning or adding more density to an expensive neighborhood?
Sure.
Okay.
So Greenwich and a lot of these cities that have not, or towns that have not been able to produce the necessary affordable housing, in many cases, the state is stepping in. And if you all look up the term builder's remedy, what's happening now is that a lot of these town cities are getting pressure where the state's saying, you're not keeping up with demand, you're not supplying enough affordable housing. And so we are going to now supersede your zoning, right? And so, these aren't massive, these aren't 50-story projects, but even going up and down the Post Road in Connecticut, you start seeing a lot of rental development. And you say, okay, well, I haven't seen this before. What's this all about? And it's not that the projects are necessarily fully affordable, but in some cases, and whatever the threshold it is to satisfy that builder's remedy, whether it's 20% or so, these projects are now all of a sudden getting approved because, again, the state is bypassing some of the local zoning regulations. So that is happening. But I do, to comment just on what you were talking about in California, and I had Sean DeMartier on my podcast. He's in San Diego doing that exact thing, where San Diego has said, we're going to give more generous zoning for ADU, accessory dwelling units, right, to help tackle that need. So look, it's going to take creativity. We're seeing that in New York City as well. I know there was a big debate, I don't know if you were following, about whether or not you should make basement apartments legal, right? And so that's, back and forth on, is that a good thing to do? Also parking regulations. You want to build a new project in New York, for a while there was very, large parking requirements. And now our mayor, with city planning, and they've got a new proposal out called the City of Yes, right? They want to incentivize development. And so they're saying, why do we need parking, right? You don't need parking if you live in the city, right? So definitely changing. I think everybody's trying to solve for this, and whether it's subsidy, whether it's more flexible zoning. I think another thing that Albany just passed was there has actually been a cap on how much residential density that you can put anywhere in New York City. So zoning here in New York City is determined by the city, but the state kind of oversees everything, and they put this cap across the entire city for residential only to say that you can't build more than 12 times the floor air ratio. So if you take that lot area and you multiply it by 12, that's the most residential density that you could receive. And they're finally saying we're doing away with this cap, and they've talked about the ability to go up to 15 times, 18 times. Again, if you're going to do that, the trade-off is going to be that a quarter of that has to be affordable. So, but yes, everybody's focused on this. There used to be this mentality of, NIMBYism, right? Not in my backyard. And now what you're hearing is YIMBY, yes, in my backyard, where, okay, we need to figure out a way, we have a housing affordability crisis. How are we going to address this? And again, if you're living in the city and you don't like the idea of a 30 or 40-story building, going up next to you, and I'll caveat that by saying, yes, historic districts, landmarks, that's a great thing to preserve some of our architectural gems. But if you're in a high density area adjacent to, subway transportation, we're not going to solve this problem by building horizontally, right? You have to be willing to go vertically. And I think finally the narrative has changed. So sorry, that's a really, I might have gone off on a little bit of a tangent.
No,
You got me
no.
started on
Super
Greenwich,
informative.
and
I
I
think
keep
it
coming
gets to
back
the
to New
heart
York
of it.
City, but I live in Connecticut, but I spend, I do the bulk of my work here in New York. So.
I think it gets to the heart of it. I think that, it's really tough to pull out the checkbook and write a check and just subsidize the rents and subsidize the development. And a lot of us are saying that it's going to be much easier to approach this through zoning, where I can just and I can be equal. I can be fair. I can basically paint a zoning change across, as you say, the entire city. I can lift lift the cap, and the entire city is my oyster. So I think this gets right to the heart of, in this election year, why it's become a hot topic and the kinds of mechanisms that we're exploring to address it.
I'm sure there's a lot of misconceptions around what the zoning relief would look like and what it would do. I think anytime there's change and anytime people mention affordable housing, there's a lot of misconceptions and a lot of kind of ideas that come to people's head. And, I think if they could fight against just some of the misconceptions with
Like what?
people, well, the tenants and the people that come along with it, I mean? That's usually the biggest one. I mean? People, why don't they want it in their backyard? Not only the tenants, but also all of the transportation and the parking and the traffic. And is it going to increase are they going to have to increase taxes because they need more police and fire and larger school districts and things like that? So just kind of having an open dialogue and getting that information
You're
out to
saying
people.
that it's poor people, inviting poor people
Some people
into
say,
my
yeah,
backyard is
yeah.
scary for a lot of people.
That's certainly an element of it, and same with just all the, if you have more people in a certain area because are allowing accessory dwellings and they're creating, they're allowing to
Density.
build up. Now it's more density. I mean, so now, like James was saying, what's the parking situation going to look like? What's my commute going to look like? What's the traffic going to look like? And then are my taxes going to increase because now we need more fire, we need more police, we need more emergency people, because you have more people now. The police force should be bigger and the schools need to be bigger. So I think it's the not in my backyard isn't just, oh, I don't want poor people near me. It's a greater story as well. I mean, so I think getting more information out there where hey, if we do this, if we do provide zoning relief and we do allow for these certain things, here's realistically what's to expect from it. And I do think it's important to add to the conversation. I think we're doing this a lot in Philadelphia where they're investing in the transportation, because in the built environment, there's only going to be so much zoning relief you could do, and there only can be so much congestion. So investing in transportation, making it easier for people to get around the city, to get outside of the city, that allows for developers to go to other areas that aren't as developed and don't have as much demand maybe right now because of the transportation, because it's not as easy to get to the city or to get to employment and things like that. So I think that's an important piece to this whole story, as well as just making it easier to get around these cities and making it cleaner and safer and all that kind of stuff as well.
I have a question for Paul Stone. I know Paul is well, say hello, Paul.
Hey, how you doing?
Paul's job is to look at places like New Canaan, where I am, and James is in Greenwich. Look at New Canaan, Greenwich, and figure out how much density he needs in a development in order to make it pencil out. So can you talk to me, Paul, about the fact that we have got a whole lot of two-story buildings in towns like Greenwich and in New Canaan, and how big do the buildings need to be in order for an affordable housing unit to pencil out at 30% affordable?
Well, and that's just it, John. And just step back for a second and just say everything that James and Peter have been saying the last few minutes. I wholeheartedly agree. I think they're, in the trenches. They see, they're on the ground, boots on the ground, and they see what's causing the problem and how it's being reacted to, and the calculations that developers like myself have to go through to look at it. And I think one of you touched on it earlier, which is that the land cost is something as a basis. That's certainly a starting point. And that is, factors large to begin with. But then, what would the end product look like and how much density can you get in there? Because the state building laws that override local zoning, the 830G laws here in Connecticut, it's a 30% rule. So the 30% is sort of the lost leader on that, and the 70% market rate need to make up for that. So each one is individual and is different, but to answer your question, John, you need that density to make the whole thing work, right? And you do want it to be downtown. We actually have 3 that were in appeal on the state level here in New Canaan. And they're all walkable, and you want that. That's the kind of thing you're looking for. But it has, at its core, something that it is like the amenities that are for it. It is largely its walkability and everything that a downtown has to offer. So it needs to work for the developers. And to an earlier point that James was making, is it comes down to the economics of supply and demand. I think that's exactly what it is. When you look at it, the housing industry is one of the only, if not the only, industry that has an artificially constrained supply, right? In other words, the local zoning really is the control point on that. And, for a lot of reasons, it's been very restrictive and has artificially constrained the housing supply. And when you do that, the long-term effect, and it has been going on for a long time, is housing prices will rise. So, the suggestion from a lot of us is that there needs to be a strategic relaxation and rewriting of some of the zoning laws so that you build denser developments in appropriate places. And you see that playing.
I'm on a zoning board, and I got to say, it's hard when the developer asks for a 5-story building and the people in the neighborhood say that's too much because there are no 5-story buildings in my neighborhood, and you're changing the character of my neighborhood. And so as a zoning person, you say, well, couldn't I get away with maybe a 3-story building? And you say, well, it doesn't pencil out. So then I have to look and say, well, why isn't the state, well, remember the beginning of this conversation where James said, well, the state offers vouchers. That's another way. So could we get there halfway with zoning, halfway with density and get the other half of the way there with subsidies for rents? Is anybody trying a combination of these things, or is it all one way or the other?
I don't think it's one way or another, and I don't think the vouchers get you halfway there. But I think change is hard, John. I mean, I think that's part of it. It's like the evolution of zoning regulations is very behind, right? Things move slowly at the government level, but you have this pressing need when you see the affordability crisis playing out at all different levels and all kinds of housing, right? And at different income levels too, even. There's just there's a dearth of housing at pretty much every price point. But I don't think any one thing will do it. I think the ADU laws that are being enacted in a lot of states and almost everywhere, they're at least looking at it and relaxing. I think that's all going towards addressing the core of the problem, which is the lack of supply. And I don't think it's going to be any one answer in any of this. You know, it's not going to be 830G is not going to solve it all. The ADU laws aren't going to solve it all. Vouchers aren't going to solve it all. I think it's going to be a combination of a lot of things, but people getting their head around the need for change and local zoning kind of working with developers and housing advocates to sort of help make this happen. So no one solution, no magic bullet. But I think it's going to be a combination of a large number of things over a long period of time, because we got into this situation over decades, and it's going to take a while to build our way out of it. So,
James, let's go back to New York. I'm going to pull up this map of what 37 properties that you're in your portfolio. Are any of these affordable? Is there an affordable strategy in New York? Because affordable, and New York's one of the most expensive markets in the country.
Right. So a lot of the multifamily that we sell, if it was pre-war, has rent regulation as part of it. So might be rent stabilized, might be rent control. So yes, I mean, you get these buildings that have a mix. We also sell some newer construction properties that have that when they were built, they took advantage of that 421A program that we talked about, where in exchange for that tax abatement, they produced the 30% affordable housing. So, and investors like that because they say, okay, well, this is very predictable. I know where the rents are. I can underwrite what the cap rate is, what the return is, and then I know what my taxes are going to be for the next 35 years, right? So we absolutely offer these. We also sell land. And as I mentioned, once the 421A expired, we did not see any demand for market rate rental. Okay. I didn't mention that, yes, there is demand to build fully affordable. Okay. But that's all based on what kind of subsidies that you can get. And the challenge is that there's so much demand, for this financing that now, because the state only has a certain amount of cap available every year, and so you get these waiting lists for 2, 3, 5 years, right? So because no one has been able to build this market rate housing in the middle, it really becomes the barbell where we're either selling land for luxury condos or on the other extreme, fully affordable, right? And so there is some activity on that side as well for the fully affordable, but these deals take a long time to close because the developers are saying, well, I can buy the site now, but then I have to sit here and wait 3 or 4 years to try to get the financing to accomplish it.
So this 485X, James, do you just predicting forward, is it going to be effective, do you think?
Well, if you listen to the comments from Jim Whalen, the head of the real estate board in New York, his commentary was he thought it was a missed opportunity for housing in New York. I think the concern is, again, if we're looking to solve for 500,000 housing units, we're not going to get there with, 50-unit projects, 100-unit projects. We really have to focus on these large-scale developments. And for 150 plus units, the levels of affordability really ratcheted up, as did the labor costs. So part of this arrangement to finalize is going to have an agreement between the real estate board and the unions. And so again, some of these projects, again, are not going to pencil. When you look at the levels of affordability, they're going to be required in, Manhattan, waterfront, Brooklyn, Queens, and then again, the cost of land, right? Because you're competing for that land with developers who will put luxury condos, right? So you're trying to, can we level the playing field, right? That's what the state should be doing. How do we level the playing field so a rental developer who's providing affordable housing can compete with a condo developer? Okay, not going to happen on Fifth Avenue, Madison Avenue, but Murray Hill, right? The financial district. In some of these areas where you would probably say the condo market is oversaturated, these are neighborhoods where we should be building rental. But again, we do the numbers and we look and we need to analyze this latest proposal, or not even a proposal. Now it's moving towards to being signed in as a bill. Our sense is that this program is only going to really work to deliver housing as you go further out from Manhattan, waterfront, Brooklyn, Queens. So yes, could this work in Jamaica, Queens? Probably. The Far Rockaways, sure, but we need housing everywhere. So it did not seem, again, just the feedback we've gotten so far is that this program is just financially, it's not going to work for the larger projects. It's a little better once you get 150 units because they're not going to have the same requirements for the labor costs. They're not going to have as deep level of affordability. But again, building 50, 100 unit buildings, that's not going to get us to where we need to be.
Peter, when I ask the head of affordable housing in New Canaan, and I say, it's very hard in this town, like the other 140 towns in Connecticut, it's very hard in this town to identify a spot that is both walkable, as Paul Stone mentioned, and is on the town water and town sewer and walkable, but large enough to support a big, dense housing. So why don't we spread this in single units, 2 units here, duplex here, triplex here, duplex here? And the answer I got from the Affordable Housing Committee was it's too hard to manage 30 or 40, units spread across the entire town. Now, obviously, the average citizen would rather not have 30 units next to them. They would rather we spread this across the entire town. But he said it's too hard to manage it. But yet you told me that you're working primarily in the affordable space of single family units. How do you manage 30, 50, 100 affordable units across a great big geography?
Sure. Well, technology is definitely the answer. I think maybe 15, 20 years ago, the question was how do you do that? And there wasn't the advancements in technology there is today. But now our tenants have portals that they can log into, and they can give us send a ticket in, and put what issue they're having or whatever it is. That goes to our head of property management. He communicates with our construction crew to see who's where and who can go over and do that. And so I think it's a combination of, the scale is definitely an important factor of it. If similar to multifamily, if you have 1,000 units in single family, it's actually going to be easier to manage in some ways, because you at that point, there's efficiencies, there's economy of scale created. You can hire good people in-house. It's just different. I mean, whereas like a mom and pop or an individual person, they might struggle managing 10 units or something like that. You look at institutional buyers, when they go into a market, they usually want to buy at least 750 homes right off the bat, if not closer to 1,500, because that allows for them to bring the construction in-house, to bring the property management in-house. They don't need to outsource that to another company that's managing thousands of other units, but and that could be multifamily, it could be other, single family portfolios. So when you're doing it in-house, obviously you're going to care about your assets more than a third-party company is. I've worked at companies where they outsource asset management, physical, like property management, and it's constant struggle with, who's the biggest fish that they're managing for, and that person's going to be screaming at them the loudest. So when you're doing it in-house, that's a great way to do it. So I think it's a combination of having the technology, you know, I think that goes back to our previous conversation where it's a lot of misconceptions. I think people don't realize the advancements in technology have made that a lot easier. And then when you have your own crews and you have enough scale to be able to send guys over to fix this problem or that problem isn't that big of a deal. But if you have to outsource it to another company, your price is going to be through the roof. Nobody wants to go anywhere nowadays for under, you know, it depends on the trade, but you know, you send a plumber somewhere, they want 125 bucks just to show up. You know what I mean? So if you're operating a smaller business and you have to outsource that, it's going to be difficult and not as efficient economically. But I think the answer is technology. You look at Invitation Homes and Tricon and American Homes for Rent. Their single family portfolios are close to 100,000 doors, and you know they want to continue to scale. They have a hard time finding new product for them to buy, so they're managing it. You know, and sometimes they don't have the best reputations with how they're managing it. So it's important that as a company you're expanding your portfolio in a way that you can provide a great experience to your tenants, because it's good to provide the housing, but if they're having a horrible experience, you know, if there's mice or if there's a leak or, you know, the toilet's not working or whatever, then what is it all worth at the end of the day? I mean, so to be able to do things in-house, to have good technology, I think that's really you know, it's a marriage between those two things to be able to do it. And, you know, this is our full-time job. I mean, this is what we do. So we've been able to find ways to do it. And there's companies a lot larger than us doing a lot bigger projects than we are.
I'm wondering about this. I'm fascinated with this concept that seems to be only in New York of rent control. I can't imagine passing a law here that says everybody has to freeze their rents. You can't raise your rents. When did that start as a concept in New York, and how has it been able to perpetuate for decades as the preferred solution in New York City?
Well, there's a very easy answer to that, which is there's more tenant voters than landlords, right? So if you run on the platform of, you know, vote for me and I'll freeze your rent, that seems to go over pretty well. Until you're one of those people that didn't inherit the property, the unit from your grandmother, so to speak. So yeah, I mean, rent control, rent stabilization, those were never meant to be permanent programs. Those were programs that were put together as kind of emergency relief during wartime. Right. And there's actually a lawsuit that's been trying to find its way to the Supreme Court, which is affordable housing is really the job of government, the public sector, and you're forcing this on to the private sector without due compensation. So what happens? So, you know, and the argument against that is, well, you bought into this system, you knew that it was subject to the rules of the Department of Housing and Community Renewal, but what happened in 2019 was it used to be, okay, we can buy these stabilized units, but once they vacate, you can do the work and you can decontrol and charge a market rent. But then the city just came in and said, that's it, we're freezing rents, right? Well, or whatever increase you get every year.
Discouraging further investment. I mean,
exactly. And so, you know, what happened was apartment values, you know, going from, if you had a fully regulated building, after 2019, that building lost half its value because you no longer had that upside potential. And so you're right, it scares away investment. Landlords aren't putting money into their units, and they're saying, well, hey, I'm going to go to a friendly, you know, a business-friendly state. I don't need to be doing business here in New York. I'll go to Florida, right?
So your income doesn't increase, but your taxes do, see?
Right. Yeah. The biggest travesty right now, and there's not, it's crazy that there's not an exact unit count. There's somewhere between 20 to 40,000 apartments in New York City right now that are empty. Why? Because that stabilized unit tenant left, right? Let's say they were paying $800 a month for that apartment. The way that the current, you know, what that 2019 legislation said was, you can actually only increase, you can only get credited for $15,000 of work that you do to that apartment. That's going to get you an $84 a month increase in the rent. But if you have someone who's been living in that apartment for 25, 30 years, and Peter can speak, I mean, you're not doing anything for 15,000 total. So why would I spend $75,000 to $100,000 to renovate a unit if I'm only going to get an $84 a month increase? Like, do the math. I'll never get it back, right? So it's actually cheaper to leave the units vacant, which is a real travesty. And by the way, as part of this, good cause eviction is what this, we haven't even, I didn't even mention this before, but it wasn't just the tax abatement for new construction. The trade-off that has happened is we are getting good cause eviction in New York, which means, and some call it universal rent control, but fair market units now, you will not be able to increase an existing tenant's rent more than 10%, the lesser of 10% or 5% over CPI. CPI is 3.5%. So yes, you give me a face, which is, I mean, this is all happening right now as we speak, right? And so every time, and look, for the existing tenants, great. You just, sure, your fair market rent is going to be locked in, unless if you're paying a certain rent. So there is luxury thresholds where they say we don't need to protect someone who's paying, $4,000 plus a month for a studio, right? But again, this is just, in my opinion, this is one more reason why an investor would say, why am I taking the financial risk to borrow money and deal with this if I don't have the ability? I mean, are you going to cap my expenses? Are you going to tell me that my real estate taxes aren't going to go up? Are you going to cap my insurance, which is doubled or tripled in the last couple of years? No one's talking about that. So, I have some pretty big concerns about what's going to happen. But unfortunately, with the passing of this, I think it's going to make things only more challenging here.
We've got only a few more minutes left. I guess we should look forward. I mean, this has been kind of bad news. I mean, I thought I had a solution there where I just go rent control, like wave the magic rent control wand and solve all my problems. But that didn't sound so good. So can we look forward and you give me some good news? Is there a way to solve my affordable housing problems, both in Greenwich and New York City and Baltimore? Take me out on a high note, guys.
No, and I'm, as brokers, we have to be the eternal optimists, right? So, look, and my friends in Greenwich might not, this might not be a popular statement of what needs to happen, but right, it's all about if you remove the barriers, right, of density, right? So if you remove that cap, the answer is more. So if we can build more housing, then rents are going to go down across the board. Okay. Here's an opportunity. If you look up the Regional Plan Association, they looked at Westchester, they looked at Fairfield County, and guess what? They said, we don't need these gigantic parking lots that are right adjacent to Metro North, right? So if you have transit-oriented development, why are we not allowing large-scale development? And that's, you're starting to see that in New Rochelle and White Plains, where right on top of the train station, you're seeing large-scale development. So look, that's the answer. We got to figure out how to build more housing. The more controls that you put on it, the less that the private sector is going to rise to the occasion. So I hope, lifting this 12 FAR cap, it's a step in the right direction for New York City. And hopefully we'll see some more policies put in place that really incentivize public-private partnerships.
Peter, you got
I
any good news?
completely agree. No, I couldn't agree with him more. It really does seem like the answer. We need more housing. So eliminating the barriers to creating more housing, doing it responsibly, getting information out there to people to fight any barriers they have mentally or around, the problems that come along with eliminating those barriers and creating more density. Certainly seems like a positive way and maybe the only way to create more housing, and that's really the answer. So completely agree with James.
Yeah, I was about to run for mayor and tell all of Paul Stone's tenants that I was going to cap their rent for the next 20 years. But it doesn't sound like such a good idea if I want to encourage more development. And so it's tough. So what did you learn today, Roberto?
This went really fast. I have so many other questions. It's incredible. I'm actually curious. I mean, we don't have the time, but I'm just curious because the tendency of affordable housing has to be substantially longer than a fair market. And how does the property degrade over time, because you can't get into the apartments, and you, by the time someone does eventually leave, it is like a full gut renovation. It's not just a quick little, you know, where you can continue to maintain things. It's got to be part of the equation for investors when they come in, et cetera. So
we're out of time. I think we're going to have to do a whole nother hour on the question of affordable housing. We should put this on the calendar. Thank you, Roberto. Thank you, Peter Neill. Thank you, James Nelson. This has been a really great and very fast hour, and an important subject. So
really
thank you very
it.
much. And we'll see you on the next, on part 2 coming up.
Yes. Thanks, guys. Really appreciate it.
Thank you. Great to be here.